Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Corbin, Carson here with a breakdown of the action in today's session, Tuesday, August 8th, where we did see stocks pair losses after touching some key technical levels, especially the Nasdaq, Ed, which we're always so focused on. But we look at everything, right? What do you have for us today?
I want to take a look at MongoDB, Nvidia, and SLB.
Okay, let's do it. First, let's analyze the major indexes. The Nasdaq today down 0.8%, coming very close to its 50-day moving average. We'll also take a look at the weekly chart as well. The S&P 500 down 0.4% today. The Dow down almost 0.5%, and the Russell 2000 down 0.6% today. So, Ed, what are your thoughts on how we finished out the session?
Yeah, I mean, look, the trend isn't great. I mean, we've been coming down.
Short-term downtrend.
Yeah, it's a short-term downtrend. Yeah, with a long-term up, absolutely. It's nice to see this, finish. The Nasdaq in particular, it tested its 10-week line intraday. Actually got below the 10-week line. It never touched the 50-day line, but the Nasdaq and S&P are sort of coming down to that, and that's a key level. This could be a great area if we hold support here, or at least hold pretty close to it. I mean, it's okay if we dip just below it. That could be constructive, because ever since like mid-June, when we were like 10% above the 50-day line on the Nasdaq, we've just sort of been like choppy. We were choppy for a while, and we haven't really been able to move up. And so, if we could consolidate here for a while, that could be very constructive. But you don't know. You could end up falling. You don't know, and you don't know which stocks will come up. So this is an important area here. I think if Chris Gus was saying IBD Live earlier, if we decisively went through the 50-day line, say on the Nasdaq and S&P 500, it would probably mean that we move the market direction into correction. So definitely something to watch over the next several days.
Yes, a key test is unfolding. We don't know if the indexes have passed the test yet, but a critical juncture, as you mentioned. And if we look at leading stocks as they make their big moves, or strong periods in the market in the past, this 50-day line or the 10-week, if you are going to see that strong trend continue, that will be a support level. So we'll have to see, will it be support, or will we need more time to digest the super strong first half that we saw?
Yeah. And just looking back in March, it looked like it was a test and looked like we were breaking it. Then we quickly came back. So sometimes that's how the test goes, which makes it extra tricky. That's one reason why you need to be a little defensive heading into it before, not to wait until, it's gone through the 50-day line. Let me dump everything. I've been holding it this whole time, but to be acting prudently along the way.
Exactly. Yeah, because we can't assume we're going to bounce. We'll have to see if it actually happens and make those incremental decisions along the way. I like that, Ed. And I did briefly show the S&P 500. I'll pull it back up here, holding up a bit better, not coming down to its 50-day line as of yet, as it's in this pullback mode. And taking a look at the Dow here, continuing to find support at its 21-day line, a pretty mild pullback happening here as well. And taking a look at IWM, which tracks the Russell 2000. I'm so used to typing it, but now I can do 0RUS. We used to not get the same day data for this, but now we do, I'm told. A little birdie told me. So reversing off lows, not closing in positive territory, lost its 21-day line by just a little bit here, but good to see it off lows.
Yeah, definitely. So, there's some strength out. So we're trying to hold key levels. So this could be a great moment, or just one last gasp before we suffer some more significant losses.
And now let's take a look at 0TNX. This is the 10-year treasury yield coming off a bit. Your thoughts on how we're seeing this interplay between stocks and yields at this point, Ed?
It seems to have broken down the last few days. It's interesting because when the yields were surging up, okay, clearly the market came under pressure, and then yields tumbled on Friday, and market didn't respond well to it. And today, the market sold off even though yields were coming down. Now, they were both coming down for similar reasons. China demand, China economy, there was a lot of weakness there. So the Hong Kong index came down. We saw copper prices fall. So this was hitting the treasury yields as well. There was also Moody's being, sort of moody about banks. And so that didn't help those kind of things. So those pressured bonds, but those were bad news for stocks too. So they're sort of moving together rather than moving inversely like they often do.
Mm-hmm. If we continue to see the yields back off, what do you think the impact would be?
Again, I mean, it's like, well, it depends. If the economy, people feel like the economy is falling apart or something, then no. But if it's feeling like, hey, we've got tamer inflation, or this is mellowing out, and you see positive growth, it could be, all things being equal, falling yields are good. It just depends on if the reasons aren't always equal.
Mm-hmm. Makes a lot of sense. And a brief look at the dollar here, up today, but off highs. It seems like it's bumped its head up quite a few times on this 28.60 or 70 level. So getting closer and closer to that, we'll have to see if it'll bump its head again or continue moving higher. It's trying to find a home above the 200-day line here. Let's take a look at some different ETFs underneath the surface. Here's a look at USO oil reversing higher today, Ed. And if you want to talk about a short-term uptrend, this is a strong one.
Yeah, this is why you can't get too focused, just be exclusive on growth, and tech growth names. Yeah, big upside reversal today. It was down 2% intraday, finished crude oil, and finished up over 1%. Really nice action.
And it looks like where it's trying to break out of now, relatively pivotal area, I would say, above 70. It's had a lot of trading action around that area. So we'll have to see if USO can find a home above these levels. And now let's take a look at SMH. How did chip stocks fare today? Continuing to see a pullback, but as of right now, support where you'd like to see it.
Yep.
At that 50-day. IGV, we'll just breeze through these, tracking software. It lost its 50-day line today, off lows, but still down 1.6%, and a lot of damage in this group underneath the surface. One name in particular we will take a look at. Let's also take a look at XLF Financials. Reversing right around that 21-day line, finding support there as this handle builds out. KRE, the regional banks, showing some similar action here with support at that 21-day line. And then XHB, the home builders, looking pretty good here. This looks like a shelf type pattern here for home builders that just nice tight action around highs.
A lot of housing stocks, a lot of some retailers, some building materials. There's still a lot of strength and positive action in this broad sector.
That there is. Well, we mentioned weakness in software stocks today. So let's go to MDB in the database software group, down almost 7% today, moving down in sympathy with Datadog. A software peer that plunged on its earnings, down 17%, but it seems like a lot of highly valued software names got slammed today, Ed.
Yeah, and there was also TDC, which is in the same group as Mongo. I forgot to mention that Teradata, that one, I'm not sure why it fell. I guess the guidance wasn't quite good enough, but boy, that one fell too. So yeah, we always used to joke because of from Blazing Saddles, Mongo. So MongoDB is pawn in Game of Life. Well, Mongo really was a pawn with these other names, these other software names today. It's sort of holding above the bottom of that gap up. Okay, the actual gap up, it's right there, but then it's sort of the whole gap up world. So it's holding there, but that was really ugly. And this is why you have to still pay attention to earnings season. It's like there was, Mongo doesn't have earnings for weeks, and yet here we are. And this maybe it holds up, maybe, an intraday, this looked like it was going to bounce back. And some stocks, we bounced back today, but on Mongo, sold off, came back, and then came back to the 50-day line and then really tumbled again. So it, you know,
Mm-hmm.
it looked like, aha, here we are, and then it didn't. So, you know, this was disappointing and a lot of weakness in the software sector.
Mm-hmm. Especially because the action was so encouraging for MongoDB on the last earnings report. Not only the numbers, but the reaction to so much volume coming into the upside. So it shows you even stocks that are looking very strong, very promising, are not immune to sector weakness. But it seems like that boom bust or gold mine landmine earnings season is continuing. Last quarter, it seemed like Wall Street was rewarding all of these highly valued growth stocks. This quarter doesn't seem like that's the case as much.
Seems like partly it's an expectation game. There's definitely been names that had pretty good results and pretty good guidance, but they weren't good enough and they still got whacked. I mean, Datadog had some weakness actually, but yeah, some name it seems to be a much higher bar for a lot of these growth stocks.
Mm-hmm. Well, speaking of growth stocks with a high bar, Nvidia is one that we're comparing a lot of stocks to. Today, down about 1.7%. Volume was light. Today, unveiling a new AI chip. So shares fell modestly, but overall, taking a step back, looks like some pretty quiet, orderly action here for this chip leader, Ed.
It's trading right around that 21-day line. Yeah, you can, obviously there's some big moves in there, so that moves can look pretty small, but that
Tame.
is pretty tight. And the relative strength line, it's flat or even moving up over the last several weeks, so you're not seeing any deterioration. I mean, look, a pullback to the 50-day line, especially if it's gradual like this, or if the 50-day line just catches up, that would be great. I mean, that would be fine, and it could then, in another week or two after that, maybe you could get a new base, and that could provide a great opportunity. At the same time, if Nvidia were to break, and it's not showing any signs like that, but if it were to break, that would probably coincide with pretty negative view, because this is the stock of the rally. I mean, when it's like the blue chip, super growth, and underpinning all of that. And they did release a new AI chip today, and that didn't help, but so it's been really strong action. It deserves a rest. Be great if it could set up again. It's just not, what you're just waiting to see, is it setting up again or is it getting ready to break? So far, I think it's healthy action, but you just have to wait to see how that works out.
But it does seem like there are some shots across the bow with some of these closely watched and heavyweight stocks out there, like Apple, continuing to slide after slicing below its 10-week line last week. And I know Tesla was trying to find support around the 10-week, and it's not having a great start to the week either. So really, it seems like we're focused on Nvidia. Is this going to be the one to continue to hold up, or will it too get dragged down with the market?
And we're even seeing Microsoft, which was never growing like those other names, but it was still like one of those AI leaders, and that's hitting 2-month lows. I mean, it's just sort of like, yeah, so those are three of the magnificent sevens, not Nvidia. That's one still magnificent, but those three below the 50-day line, just something to watch. They're not carrying the market the way they were.
Yeah, we'll see if it turns out to be the magnificent solo stock out there. And SLB in the oil and gas sector reversing higher today, which honestly, Ed, it seems like it was kind of needed, this little shakeout here, because as it's been slowly trending up, it has been kind of wedging upwards since the volume was declining. So do you think today's shakeout was enough to compensate for that wedging type action?
I mean, it would have been nice if it actually held down there for a day, because it's like you only had, I'm not sure intraday, what you had 10 minutes to be scared, and then it bounced up again. So, I mean, yeah, because that's the thing. Who is that shaking out? Like pretty much within 5 or 10 minutes, it was rallying off that low. I mean, look, crude oil went from $2, 2% down to up 1%. So it's not, I mean, it's understandable. Look, it's helpful. I mean, you'd like to see more, but sometimes you don't get that. I mean, it makes the handle at least something. On a weekly chart, it has a slightly different handle because it actually had a handle already, but that was pretty tiny too. So it's technically in a buy zone on a weekly chart. We've seen some other names in this group that were higher flyers had some wild action, in at least for momentarily on earnings. This was, Tidewater. That one had a wild day. That turned out positive. Conference call helped on that. Oceaneering was another one. Those are smaller names, so are more likely to be volatile. That one's still recovering, not doing terribly, but SLB, formerly known as Schlumberger, really holding up well. And look, oil prices are coming back, but it's concentrated in the oil services and the drillers and the machinery, because I think last year a lot of the producers were just sort of riding these semi-tapped wells, and so they could just sort of cruise and just didn't need to do much work. It's just turn on the faucet and the money comes in. Now they're having to pay for SLB and these others to actually do the work, and those rates are a lot higher than they were a year or two ago. So you're seeing oil go up, but it's really benefiting these equipment and services firms rather than the producers so much.
An interesting look at the dynamics at play there, Ed. Thank you so much for breaking that down. And thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live. And we hope you join us, investors.com/IBD Live, for all the details on that. We will see you there. And we'll also see you right back here tomorrow at the close.